Hi there, Greg Lewis, Metastock Software. Hey, you're about to watch a recording of the April 2017 Online Trader Summit presented by Metastock. This quarterly event, put together by our own Jeff Gibby, highlights some of the industry's best traders, and I know you're really going to enjoy it. Hey, if you haven't tried Metastock yet and would like to have an extended 3-for-1 trial, visit metastock.com/traders-summit 3-for-1, or just click one of the things provided and get your free trial. Thank you, and I hope you enjoy the presentation.
Let's go ahead and talk a little bit about Steve Primo. Steve's done a number of these events with me, both live and in person. DC means daily charts. That's a good question, Steve. And daily charts means it's a daily chart only, and it updates once an hour. No. Metastock you can do is either there is Metastock TN. Asked a question. I thought Metastock is a one-time fee. It's actually a subscription cost. What you're probably thinking is some of the add-ons that we did with like Price Headley and Steve Bigelow a little bit earlier are available as a one-time fee. So that's kind of what you're seeing there. They do require Metastock. We do include a free month of Metastock with those purchases. So again, if you have questions about that, just due to time, I'm going to have you kind of call in our guys, 800-882-3040, or visit online with them at metastock.com/saleschat. I want to thank all of you that called in earlier and got set up. I know the phones were very, very busy a little bit earlier. They're starting to get a little bit more relaxed, so you can call in and have some conversations with people as well. So, in any case, I thought that was what you were asking for, Matthew. All right. Steve is a great presenter. You're going to have a very enjoyable session this time, and not that the rest of them weren't amazing and awesome as well. Steve does a very, very thorough job. Let's go ahead and bring him on here. Make sure we can get his audio working. Steve, can you hear me?
Yes, I can. Can you hear me?
I can. How you doing today?
Good. Doing great, Jeff. Can you see the screen all right? I'm not sure if I'm on there or not.
Not yet. I usually just make sure I can hear you first, and then I send you the controls here, and then I can make sure I can see you. I have a very, very big, specific process for the order in which I do this. So you're going to talk about 5 exit strategies that will change the way I trade.
Right. Yeah, thanks a lot, Jeff. I really appreciate it, and thanks to everyone for attending today. As I'm sure you've learned by now, this is a great way to educate you and learn a lot more about trading. We found that what a lot of people tend to ask at Specialist Trading and Pro Trader Strategies with all of our members is not so much about entries or how a particular way in which to trade, but more so about exiting. So many traders often have a strategy or a method that works pretty well, and they'll exit, and then inevitably they'll leave a lot of money on the table. So I'm going to share with you 5 exit strategies that really I think can change the way you trade and will help you in any way, at least to try and capture a little bit more gains. For example, I'm going to start off by showing you this chart right here in Apple. Now, as you can see here, it's been going up fairly nicely. Now, one of our strategies actually generated a buy signal right here. Now, in today's presentation, I'm going to share with you about 5 strategies, but one of them will be able to execute right here, right towards the very tops of that really nice rally before the trend change. So this promises to be a really great presentation. I'm going to give you all the complete rules, what you need to know about applying these to your trading, regardless of what market you trade, regardless of what time frame, and regardless actually of what direction, because we're going to be mainly focusing on this Apple chart just so that you can understand the methodology. But it can be applied to any market, any direction, and in any time frame. So welcome once again. Thanks again, Jeff. Thanks to everybody for attending. My name is Stephen Primo. I'm the president and founder of Specialist Trading. If you're new to my presentations, we are first and foremost an educational company. Even though we provide all of our members around the world in over 110 countries and in every state in the United States with strategies and signals on those strategies, our main philosophy and our really core belief is really simply to educate you so that you can ultimately make your own decisions. Now, I've been trading for 4 decades now. I started out on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. if you're not familiar with what a specialist was, because there aren't a lot of them around anymore, if you ever look at those old photos of the trading floor with all the paper on the floor and people yelling and screaming, making weird hand signals, the specialists were those traders behind those large wooden booths that made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular stock, let's say IBM or Waste Management, you had to go to the trader who specialized, who made a market in that. So that's what I did for roughly 9 years. I was a specialist during the crash of 1987. I made markets during that environment. I also traded through the bull market that followed, and I've seen and traded just about every methodology you can think of. I've traded straight up markets, straight down markets. I've been on the floor for sideways markets. I've traded just about anything you can think of. And so in my 40 years of trading, I know what works in terms of consistency, and I know what doesn't. So around 8 years ago, I teamed up with Pro Trader Strategies, and we formulated Specialist Trading so that all we do is educate our members so that they can basically make your own trading decisions. It's our philosophy that the reason why most traders fail, and it's been estimated upwards of 80%, is because you're basically taking yourself out of the game. In other words, you're relying on someone or something else to tell you how to trade. And think of it, look at your own decision-making process. Do you listen to some trading guru tell you what to buy or sell on a daily basis? Does someone tell you, or does some indicator tell you exactly where to get in, where to get out? In other words, you're not a part of the process, and this is why we think it's so difficult for traders. And so this is, I think, what's so great about the summit today is that we're providing you with education so that you can make your own trading decisions. This is how, in my opinion, one becomes a consistent trader. I know this is what was able to turn my trading around, because when I first started, I struggled just like everybody else. Even though I was on the floor and I had advanced information about the companies I was trading and the stocks I was making markets in, I still struggled tremendously. And so I finally put myself in the shoes of, of making my own decisions, and that's where my trading started to turn around. So this is what we do at Specialist Trading, make you a part of the process as an educational company. Now I'm going to show you these 5 great strategies today, so you can start applying them as early as Monday if you like. But before we begin, as always, we ask that you please take a moment to view our required disclaimer. I'm going to show you a lot of performance results applying these strategies, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this, so please take a moment to view it. And as you're doing so, I would also like to take this time, if you haven't done so already, to invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down. That's an abbreviation for Specialist Trading, at SPCLST. TRADG. Every day I post new information, anywhere from signals that our strategies have generated to just little bits of wisdom along the way that I've accumulated. So lots of great free stuff on Twitter to follow us on a daily basis. Okay, so as I stated, my goal is not to force feed you signals. My goal is not to tell you what to buy, what to sell, what the perfect time frame is. My goal here is to teach you how to trade with the specialist edge. Just the same way my mentors taught me, and what I really believe is what has sustained me for 40 years now in the markets. These are the same concepts, same techniques that I teach all of my students around the world and in virtually all the states in the US. So we're more about educating you. And a couple of things I want to say, since this is going to be conducted like a class, I'm going to be sharing a lot of stuff with you, please wait till the very end to ask any questions. We don't want to bog the session down. It'll probably be over within the next 20 or 30 minutes, and then we can reserve the last portion for questions. But if we stop at every slide to ask a question, this short 45-minute presentation may last as long as 5 hours. So just if you could hold off to the very end, and then we'll take the questions.
Hello.
Oops, I think that's Jeff answering the phone there. Somebody's answering the phone. So why don't we get started? And let's begin with this chart. This is the Apple chart that we're going to be talking about. And remember, we're going to be looking at this chart through the entire process. But please remember that it doesn't matter if we're looking at a stock. It wouldn't matter if we were looking at a monthly chart of, if we were looking at a monthly chart of the currency pairs. It wouldn't matter if we were looking at a 5-minute or a tick chart of the E-mini S&P. So it really makes no difference. I don't want you to get bogged down and to think that it only has to apply to this current chart here. We're more concerned about the actual strategy that you're learning, okay? Now, also another thing I want to mention, that when we're trading these, remember each and every strategy will be different using different patterns, different indicators. But please remember that they're not all designed to get you out at the top or get you, the most bang for your buck. They're just trying to follow the market. And so experiment with these before you actually use them. That's the only thing I really would stress. Paper trade for a while before jumping right in. I know a lot of your eyes may light up and you might think, boy, this is fantastic. I'm just going to start trading this on Monday. But paper trade a little bit just so that you pick one or two that work best for you, okay, and for your trading style. All right, so let's begin. We're going to start off with range extension, all right? Some of you may not really know what this is, so let's go into the details. This is probably one of the simplest, but it's actually most misunderstood of all of the exit strategies. So let's look at this chart again in greater detail. This is the same Apple chart we're looking at. There's where our buy signal was generated right here, all right? Now, this is a buy signal off of a daily bar, all right? These are daily bars here. Whenever a signal is generated, and remember, it doesn't matter if it's on a daily bar, a tick chart, or a monthly bar, but when all the rules meet, when all the requirements are met, when everything comes into place, that is what's called your signal bar or your setup bar, okay? And in this case, it's right here on top of the green arrow. So this is our setup bar. All right, so what you want to do is, forgetting about where you're entering, forgetting about where your stop is, it doesn't matter, but whatever the length is of that setup bar from top to bottom, from the top of the wick to the bottom of the wick, you want to measure that in its amount of points. Now, obviously, if you're trading currency pairs, it'd be the amount of pips, okay? But just measure from top to bottom what that amount of points are in this case, and that equals 100%, okay? So what you want to do is take that same amount of points, whatever it is, on the setup bar and simply double it. And this will give you your 200% range extension exit. Now this exit is perfect for traders who like to get in and out of positions rather quickly. They're the type of trader who doesn't want to keep positions overnight. Let's say if you're trading intraday, or you don't want to tie up money for trading swing trading. You just want to get in and out. You feel confident about your strategy. It has a pretty good winning percentage. So you don't mind getting in and out rather quickly. Okay? Now let's say you want to get a little bit more bang for your buck. Well, you take that same amount of points and you just simply add it again, and this will give you the 300% range extension. Okay? So this is another level where you can exit either all of your position, or partially if you exited partially here and then partially there. And then lastly, if you want to go and stretch it as much as you can, we would suggest going for the same amount of points but just add it on at the 400% range extension. Okay? Now here's where we come into the educational philosophy, because people will often after we give this presentation or in our courses say, well, Steve, this is great, it makes it easier now I have structure just based off of the setup bar, and so I know where to place my limits. But what's the best place to exit? Now, once again, that's the way we're all trained as traders, having someone tell you what to do. And that's the way, most traders are trained. I know I was, and that's, in my opinion, why most traders fail, because you want someone to tell you exactly what to do. You want to take yourself out of the game. Remember, our philosophy is the only way you can become a consistent trader is by being supplied sound fundamental education, practicing with it, and then you decide what works best for you. So let me show you some of the different ways in which you could see that would work best for you. Now, once again, as we stated earlier, if you're the type of trader who likes to get in and out very quickly, you don't want to hold positions and tie up capital, well, then use the 200% range extension. If you're the type of trader who likes to trade multiple lots, maybe 200-300 shares of stock, maybe 4 or 5 contracts or whatever you're trading, well, you could sell partial amount here and then a partial amount here, okay? Now, let's say you're the type of trader that wants to get as most bang for your buck. You don't care, you're going to try and squeeze as much as you can. Well, then obviously you'd sell everything up here at 400. Another way to do it also is to have the market take you out. In other words, once you're entering the trade and you get up to the 200% range extension, well, you would move your stop wherever it is, if it was down here or just below the setup bar, move it to unchanged, move it to right where you entered. So now if it doesn't work out and we don't go any higher and we come straight down, well, guess what? You didn't lose anything, you just broke even. Still, other traders will say, well, when it goes up to 300, I'm still not going to sell anything. I'm going to move my stop now up to 200. And then when it goes up to 400, I'll move my stop up to 300. So you see, there are 1,000,001 ways to trade. Which is the right way? They're all the right way. The wrong way is when you try and trade like someone else. That's where you get into trouble because they don't have the same characteristics as you. They don't have the same temperament or risk parameters. So you have to find what works for you. That's the only way you'll become consistent. And this is why we're presenting you with all these different variables, all these different options for exiting. Our only suggestion would be, at least when you're beginning to use this, if you decide to use this exit pattern, to exit everything at the 400% range extension. Why? Well, remember, there are no statistics because we're an educational company. We're not a statistical company, but there are no statistics to back this. But I have seen in roughly 40 years that a good deal of trends seem to stop and change direction around the 400% level. So you would hate to see it get up to 400 and say, boy, I'm going to squeeze more out of this and sell it at the 600, at the 800. I'll be rich, and then see the trend change, okay? So what you want to do is, if you can, exit everything at the 400 and then just say thank you for the nice profit you have, okay? All right, so that is, in a nutshell, the range extension. Remember, you can use that if you short a position. You can do this with options, too. It doesn't matter if you purchase the stock. So if you get long the option based off this buy signal right here, you know, you can, once price gets up to any of these levels, you can sell your option, whatever price it is, all right? Okay, let's go on to exit strategy number 2 now. We talked about range extension. Now let's talk about pivot highs and pivot lows. Now, a lot of traders are familiar with this, but for those of you who aren't familiar with this very common and traditional technique, let's have a brief refresher course, okay? This is a short-term pivot high. It's a 3-bar pattern. And you have kind of this arrowhead approach, as you see here. In its most general format, you have bar number 1 creates a high right here. Bar number 2 creates a higher high. And bar number 3 creates a lower high. So once again, you create this type of an arrowhead approach. Now you will find and you will be applying short-term highs in downtrends, because if the market you're trading is going lower, you will see these highs being created, so you get lower highs. That's a characteristic of a downtrend. But conversely, we have a short-term pivot low. This is still a 3-bar pattern, but bar number 1 creates a low, bar number 2 creates a lower low, and bar number 3 creates a higher low. So now you have the opposite. You have this type of a V approach, okay? Now short-term pivot lows will be applied in uptrends. So as the market you're trading, regardless of what time frame, regardless of what market it is going up, you'll be seeing these short-term pivot lows, okay? As we look here in Apple, we're looking for the short-term pivot lows. Why? Because the market's going up and we're long, okay? So we want to apply this to the short-term pivot lows. So once we enter into the trade, we wait for our first short-term pivot low to be created, and it was right here. As you can see, we have a low followed by a lower low and a higher low. This creates this type of a V approach. So we will put our stop right here. All right. Now, where you determine to place that stop, once again, is entirely up to you. We have some students that say, well, Steve, I like to place it a full point below to give myself some room. Whereas we have other students that say, no, Steve, I like to place it 1 tick below. If it trades 1 tick below that, I'm getting out. Which is the correct way to do it? There is no correct way. The correct way is the way that makes you feel the most comfortable. Okay? These are not statistics. These are just things that have stood the test of time. So experiment to see what works best for you. All right, so we're in this trade, and now we've moved our stop right here to the first pivot low. And so the trade starts to unfold, goes in our direction again, and here we have another pivot low. Even though it's difficult to see because of these bars here, trust me, this is a low, and this is bar number 2 is a lower low, and bar number 3 is a higher low. So they created this pivot low right here. So you would place your stop just below here, and if it was a tight stop, anywhere from 1 to 1.5 points, guess what? You would have been stopped out. So you still would have had a profit on that trade. It would not have been as nice as the range extension. But remember, as I stated at the beginning of this presentation, these are not all designed to, squeeze as much profit as possible. They're just different techniques to apply that make you feel comfortable. So pick and choose which ones you like. Now, in other examples, perhaps the range extension would get you out a lot sooner, and if you used the pivot lows, that would keep you in the trade, 10 times longer. So it's always good to experiment to see which one makes you feel the most comfortable. Okay, That was pivot highs and pivot lows for exit strategy number 2. Let's move on to exit strategy number 3, which I believe is probably the simplest out of all the strategies, and that's just applying a 9-period exponential moving average. Okay, that's all you have to do, and here's how you apply that. Once again, here's our chart. We entered into the trade right here, and once you enter into the trade, and once you've had it for a good 2 to 3 days or 2 to 3 bars, you apply a 9-period exponential moving average, as we see here in blue. Okay, and here's the way this technique works. You want to wait for the first bar to close below the 9-period exponential. Now, as you see here, we have 3 bars that actually touch it. This one bar opened below, but then closed higher. Remember, the rule is you want to wait for the first bar to close, not trade intra-low below the 9-period exponential, but to close. So you have to wait for the close of this to work and to apply this technique. Now, as you see here, none of these bars closed below the 9-period. We also traded below here. None of them closed below, even though they dissected it a little bit. We didn't get our first close until this bar right here. So this is telling us that we have 2 choices right now. If we're an aggressive trader, we can exit at the market. We can just say, okay, thank you, and 5 minutes before the close of the day, we know that we're going to be closing below, unless there's some nice, great rally, we're going to be closing below this 9-period exponential. So there's no reason to stay. Let's just exit, okay? And you can exit there. Or if you're a little bit more prudent and you'd like to stay in the trade a little bit longer, once again, you place your stop just below there. How low you want to have it below, it's up to you. 1 tick below, 1 point below, 5 points below, it's entirely up to you. Now, had you exited and taken the first option, well, guess what? You would have been kicking yourself the next week because we went right back up. So in this case, it was better to place your stop. Is that going to be the same with every scenario? Absolutely not. It changes all the time. So we would have stayed in the trade had we used a stop order or mental stop, whatever. And now we're going higher and we feel good about ourselves until this day right here. What happened? We closed below the 9-period exponential. So now we're faced with a decision. We can either exit at the market or place a stop just below. Now, if we exited at the market, we're out right here, or we can place a stop just below. Now, either way, look what happened. We would have been out anyway. The very next day, we gapped lower. And even though you would have gotten a worse price on that opening, you would have been happy you were out a week later as prices really went down. So this is a really simple technique to use. Once again, all you're doing is applying a 9-period exponential moving average, but 2 things I want to point out. First of all is what we've talked about. It has to be on the close. So just because we trade below, as we did here, does not mean you sell at the market or you place a stop there. It has to close, just like we did here, just like we did here. Now, the second thing I'd like to say, and this is very important, is give this trade 2 to 5 bars to grow. All right, so what do we mean by that? Well, oftentimes, let's say you enter into a trade. How many times have you entered into a trade, in this case a long scenario, and then the next day it goes straight down, and you get scared, you stop yourself out, and then it goes back up, okay? That's just a little backing and filling that happens many times. And if you're using this technique, oftentimes a day or 2 later, it may close, and you'll exit and say, that's it, I'm out. I'm just going to take the quick loss. And then it'll bounce right back up. So we would suggest giving this 2 to 5 bars before you start looking for the first close, okay? Just to give yourself some room to grow, okay? I'm going to show you an example later on in some currency pairs where had you not given yourself room, you would have exited far too early out of a very profitable trade. Okay, so that was probably the simplest of all the techniques and strategies I'm going to be sharing with you today. Let's move on to exit strategy number 4. And as we go higher, they're going to get a little bit more complicated. Now we're delving in a little bit to indicator-based exit points. And this is with the slow stochastic. Now, the slow stochastic is just a very common indicator. It's on Metastock, virtually on any charting software platform. And we're going to use it to determine where we place our stops. But I'm going to show you a unique and edited way in which to do that. Okay, now when you go to a slow stochastic, the standard default setting is usually set at 14. That means it looks back 14 bars to come up with its calculations. Don't ask me the inner workings of stochastics. I can't explain it. I don't even know it myself. All we know that is that the default setting is usually set at 14. All right, so what we want to do is alter. We want to edit that. And we want to change the default of 14 down to 5. Okay? So whatever charting software you're using, just go to the edit box, wherever it is, and just wherever you see 14, make it read 5. Now, as we add this indicator, we see here on the Metastock chart, to the Apple chart, this is what your standard 14-period slow stochastic looks like, okay? This is what we're looking at right here. This is not going to help us. What we want to do is have things a little bit more jaggedy instead of being smooth like that. So what we do is we edit this to a 5-period. And you see now how everything changed. So we have this kind of a jagged up, jagged down, and so forth. That's what we want. And why do we want that? Because we're going to take our stop placement off of the indicator, not off of price. This is where this is a little bit different. We're going to place our stops based off of what the 5-period stochastic is telling us, not based off of what the market is telling us. It's a little bit different, a little bit innovative. Okay? So here's the 5-period now. And as you can see, we have these kind of jagged bottoms here, these V approach bottoms. In fact, they look very similar to the short-term bottoms, okay? As you can see here, there's one created right here, there's another right here, and another right here. Now, it really makes no difference where they're formulated. They could be formulated up towards the top, way down below the lower threshold. It makes no difference, but all we're going to be looking for is this type of a jagged bottom. We want to see a low on the indicator followed by a quick upward move. And if we look at that here, that's these two bars right here. Here's where the low was created, and here's the first snapback upward move in the indicator. Now, once you find those two, go up to the chart and see the bars that correlate to those two settings on the 5-period stochastic. Now, of those two bars that are correlating to the indicator, which of those two is the lowest? Well, obviously, it's this one right here, right? So this is where you're placing your stop, just below there. Once again, however low you want to place it below is entirely up to you. But this is not based off of what the chart is telling us. It's based off of what the indicator is telling us, okay? It's a lot different from what we've been looking at before. All right, so we've placed our stop based off the correlating bars to the 5-period stochastic. So we simply wait. We're either going to get stopped out right here while we're waiting to find another jagged low being made on the stochastic. And as we see here, we have a low, and then we bounce back up rather quickly. So those are the two settings that were in question, this low and then the first snap up bar. Now we find the corresponding bars, and they're these two right here. So out of these two, which is the lowest of those two bars? It's this one right here, the second one. So we place our stop, we move the stop from here and move it up to this point. Now someone would say, well, Steve, what's so different about the pivot lows? This is the same thing. Well, no, it's not, because if you remember, we were stopped out right here off of the pivot low, which was based off of price. This is not based off of price at all. In actuality, we're basing this off of what the indicator is doing. Okay, so where a pivot low would have had us stopped out, we're still in the trade right here. Okay. Okay, so we just move our stop there. We don't even have to follow the stock. There's no need to listen to news. We always tell our students around the world, listen, if you feel you have to listen to news, that's great, but it's not required. If you feel you have to look at the earnings of a stock, that's great, but there's no requirement. If anyone needed to do that, wouldn't you think it was someone who was making markets in roughly 50 or 60 stocks? Well, that's what I did, and I stopped looking at news some 40 years ago, so I'm still here. I'm just here to tell you that we're not going to tell you you shouldn't use it, but if you want to, that's fine. But there's no requirement at all, because we're just following price. Price usually tells us everything we need to know, and most of the time it tells you in advance of the news. Okay, so we're in the market right here. We've moved our stop up to this place, and now all we have to do is track the indicator again. We don't have to look at the stock at all. We just track the indicator. We're either going to get stopped out here, or we're going to move our stop up, which we do. We have another bottom created here, and then we snap up very quickly. Okay? So we look at the two corresponding settings on the 5-period stochastic and then match them with the corresponding bars. Which of these is the lowest? Well, obviously it's this one right here, so we place our stop just below there. You see, a pivot on the stock would have had us placing a stop here, but our stop is a little bit higher, okay? So we've moved our stop from the initial point based off the indicator from down here all the way to up here. And now we're ultimately stopped out when the market gaps down. But see how simple that was? Now we could be in this for weeks, months, even years. If it keeps going higher, we're just following the indicator. So this will keep you in the trade as long as it can until ultimately things turn around in the opposite direction. But remember, where this is different is that we are taking our cue from the 5-period stochastic. We're not taking our cue from anything what price is doing, okay? All right, that was slow stochastic exit strategy number 4, and now we move to our last one, which is a basic indicator. Once again, you can find this on virtually any charting software. You can find it on Metastock, and that is our DONCHIAN channels. This is a very common tool. A lot of people think this is similar to Bollinger Bands, but it's not, because Bollinger Bands are a lot smoother. DONCHIAN channels have a more of a stair-step approach, okay? They have a more of a jagged kind of sideways up, sideways up, sideways up type approach if you're going in an uptrend. Obviously, if you're going in a downtrend, it's a downward stair-step where it goes down, sideways, down, sideways, down, sideways. Now, the standard DONCHIAN setting is usually set at 21. All right, once again, that just means that the indicator looks back 21 periods to come up with its calculation. Once again, we're going to edit the indicator, and we're going to edit it down to 9, okay? We want to change things. We want to speed the indicator up a little bit. So we're going to change the setting from 21 to 9. Just go into your edit box, and where you see 21, make it read 9. Now, I've heard that some DONCHIAN channels and some platforms have it set at 20. That's okay. You can change that to 9 as well. We just want it at 9, okay? And so now once you apply the DONCHIAN channel, they are a great way to determine the trend. When you have these really nice moves, such as we're seeing right here in Apple, once you apply the DONCHIANs, you'll get this really nice kind of upward stair-step approach, as you can see here. Remember, they go up, sideways, up, sideways, and same thing on the top. So they're both in sync with each other. By in sync, we don't mean exact sync, because sometimes this is going sideways, sometimes this is going up. But we mean that conventionally, they're both headed in the same direction, and that's an upward direction. They'll stop and pause, and then they'll go higher. Stop, pause, go higher. What you want to wait for is the very first time you see either one or both of those DONCHIAN channels head in a different direction, well, then that's your sign to get out. Because as you can see right here, they're all headed in the same stair-step upward direction. But at this point right here, they change. So you would have seen that where this one was still going higher, this one started to come lower. So this would have been your exit point somewhere around right here. So all you're looking for is, once you're in these trades that have these very, very strong trends, apply a 9-period DONCHIAN channel. And they'll usually be in sync the entire way. All right? If you're short, they'll be in sync going down. If you're long, like this scenario, they'll be in sync going straight up. The very first time you see one of these change directions, that's a good spot to exit, or at least move your stops up, or exit a portion of your position, okay? All right, let's review before we go to questions that I'm sure many of you may have. Remember, we talked about 5 exit strategies. The first one, range extension, probably our most popular exit strategy, because you can apply it onto anything. And remember, these strategies can be applied to any market, any time frame, and any direction. So I don't want you, just because we've been using the standard example of Apple on a stock here, a daily bar, doesn't mean that, well, I guess I can't use this. I like to trade 5-minute E-minis. No, you can use it on E-minis. You can use it on tick charts. It doesn't matter. It's the same thing, though, especially with range extension. Whatever you have, when all the requirements to your strategy or system come together, whenever it gives you the green light to either buy or go short, that's called your setup bar, okay? All you want to do is measure the range of your setup bar from top to bottom. Now, if you're using candlesticks, top to bottom of the range does not mean open to close. I don't know why a lot of people have come to that understanding that that's what range means. Range means, and it's always meant, the very extreme high and the very extreme low. So the top of the wick to the very bottom of the wick is your real range. It's not from open to close. We're not concerned with open to close, okay? That's for candlestick patterns. That has nothing to do with range. So whatever that amount of points is, if you double it, that will be your 200% range extension exit. If you triple it, 300% exit. And quadruple it, your 400% range extension exit. Now, our only suggestion is, especially if you're beginning to use these, always exit your entire position at the 400% range extension, because we would hate to see you as a beginner have a really nice profit and you're at the 400% range extension and you start to get a little greedy, and then something happens, some news comes out or something, and then you give it all away. And now what turned into a great profit is now a big loss. So we would suggest, especially in the beginning, to exit the entire position at the 400% range extension. Okay, pivot highs, pivot lows. Very simple. I'm sure many of you have heard of that. Pivot highs and pivot lows are just 3-bar patterns. If we're looking at a movement and going higher, as we are here in Apple, we're looking for short-term pivot lows to be created. These are those 3-bar patterns, a low followed by a lower low and a higher low. That's your pivot low. You just follow them all the way up and place your stops just below that. Obviously, if you're going lower, you would be looking for pivot highs and you place your stops above. Okay? And you basically, you're letting the market take you out with these particular techniques. Strategy number 3 is our 9-period exponential moving average. The simplest of all the strategies. All you have to do is, once you enter into the trade, apply a 9-period exponential moving average. And remember, you're basing your exit, whether it's a stop or an exit at the market, off of the close, the first close below the 9-period exponential if you're long, or the first close above if you're short, and you're going to cover your short. You can either go with the market or place a stop. The only caveat is, and the suggestion is, that you want to give this technique a little room to grow. So give it 2 to 5 bars before you actually implement it. You don't want to get stopped out too early. The next ones were the stochastics. Okay, slow stochastics. We usually have the default setting at 14 on this very standard indicator. We want to change it down to 5 because that will give us that jagged look on the indicator. And remember when we talked about pivot highs and pivot lows, where we're looking for that same pattern but on the actual indicator, not on price, but on the indicator. When you see one of those, you find the corresponding bars, and that's where you place your stop, either below those or above. And then lastly, the DONCHIAN channels, okay? Another standard indicator found on most charting software packages and Metastock. We want to change that default setting from 21 down to 9. Okay, we want to speed it up, and once we do that, it will contain these nice trends either to the upside or to the downside. But once the trend changes, that'll be your signal either to exit your position entirely or to at least take some of your profit off the table. Okay. Now these are all different in the way they're implemented and executed. They're designed to keep you in as long as possible, but as you can see, some fare better than others. There is no right or wrong way to trade them. The only wrong way to trade is when you're following someone's orders who tells you what to do on a nightly basis. You have to make that decision yourself. And lastly, these can work in any market. Let me show you some other markets where we apply these exact same strategies. Let's look at an intraday chart of the E-mini S&P. Now this is a 5-minute chart of the E-mini. This was an actual sell signal generated by one of our stocks, or I should say one of our strategies in the E-mini. As you can see here, here is our setup bar. This is the bar where everything came to place, where we said we're going to be selling the E-mini on a 5-minute time frame. So even if this is just a 5-minute bar, we're going to measure the range from top to bottom, and that will give us 100% range extension. Now, since we're short, we're going to subtract that, 200, 300, 400. And we can pick any one of these levels to exit. If we're trading multiple lots, we can cover a portion here, another portion here, another portion here. It doesn't matter. Or we can exit all at 400. Our main suggestion is you should be out of your position entirely, in this case a short position, at 400, because just as I said earlier, that's where the trend many times will change in another direction. How about the Forex markets? All right, let's look at that 9-period exponential technique we shared with you a little bit ago, okay? Here's a weekly chart of the Canadian dollar. Here's another signal that was generated by one of our strategies, all right? Now, what we're going to be doing this time is applying a 9-period exponential, as you can see, okay? This is the 9-period exponential. We are going to place our stop, or we're going to exit at the market on the very first close below that 9-period exponential. Now this is where we stated previously where you have to give the trade a little room to grow, because here's our setup bar. We entered at the close of this bar, And look what happened on the very next bar on a weekly basis. We closed below. Now, had we used this technique in its very basic form, we would have said, well, Steve said you have to sell the first close below, and you would have exited, and guess what? You would have missed this tremendous move here. This is why we say give the trade at least 2 to 5 bars to grow. So 1, 2, 3, 4. Here's 5 bars. Now, if we had a close below, then we would apply the exit technique. But as we can see, we didn't close until a good 3 to 4 months later, and at this point. Now, here was our first close below that 9-period exponential. You could either sell at the market, sell your position at the market, or place a stop below. Either way, it would have been a good point to get out, because look what happened in the following weeks to come in the Canadian dollar. Okay? Remember, these techniques and strategies are not designed to get you out at the very top. If anyone promises that, I think you should run, because it's very difficult to do things. I've been trading for 40 years, and very rarely do I get in at the very bottom and out at the top. We're not looking for that. We're just looking to capture these trends and take a good chunk out of them as we can, okay? So don't get hung up on thinking that, well, gosh, why didn't I exit up here, okay? Now, we just went over 5 exit strategies that I really and strongly believe will change the way you trade. I know I've taught this to a number of my students around the country and also around the world, and many of them have written back and said, boy, this is so great. I've always had difficulty trading because I didn't know when to get out, or I couldn't stay in trades long enough, and these have really helped me. For the first time, I've become consistent. The only thing we stress is to study these, is to paper trade them first, and then just pick 1 or 2 that you feel comfortable with, okay, and then apply them to your own trading. Now, I want you to ask yourself before we go into question and answers, and I'd like to ask you a question and answer this honestly. Do you think these edges could have helped your trading this past year? I mean, go back and look at your, we've only been in the trading year for the last 4 months roughly. Go back and look at your trades. Do you think they could have helped you capture a lot more profits? Do you think they would have made you feel a lot more comfortable, okay? I really think once you go back and do the research, you see that they really could have helped you tremendously. Now, what I went over today were just exit techniques. What if I could give you much more, high probability techniques for entry? How about for stop placement? How about all the rules to full-fledged strategies? Well, here's what we have offered for all the people attending the Trader Summit today. This is our special discount that we have in association with Metastock, and this is our Insights package. It's Insights, Wisdom and Trading Strategy from the floor. This is an ebook we've created. It's new, and what we've done is really put the best of the best in this. We give more high probability trading edges. I talk about the best ways to trade with the trend. We talk about a confirmation method that can really fine-tune your entries. I go into detail on an event-by-event basis of what happened during the crash of 1987 and how I traded on the floor. But I think the best thing about this ebook is that you get the complete rules, not to 1, not to 2, but to 3 different strategies. These are great, great strategies, and I'm going to give you the complete rules and show you how to trade, where to enter, where to exit, and where to place your stops, okay? And you can decide which ones work best for you on 3 different strategies. In fact, let me just show you a couple of examples. Here's one in SWKS. As you can see here, this stock was moving up really strongly and all of a sudden hit some type of a top and then rolled over. A lot of people were calling for this to be shorted. We hit some type of major resistance. Say there was a Fibonacci resistance there, or all the institutions were selling. So the chat room you go to was telling you to exit this, okay? This is the way most people trade. Once again, they get their source, they get their decision from someone or something else. But when you learn how to listen to the market tells you things entirely different. In this case, using strategy number 1, a buy signal was generated. Now this is a pullback strategy. So what this strategy did was it determined that we were still in an overall trend and that this sell-off wasn't a topping formation, it was simply a pullback in an overall uptrend. And then look what the stock did in the following weeks. So members of our strategy number 1 course took advantage of this and did very well. You're going to get all the complete rules to this in our ebook, in our Insights ebook. But we're not stopping there. Here's another strategy. Looking at this in Fossil Group, someone would say, well, boy, we're making some really nice support here. All the institutions are buying. The guy I follow on TV every day, he loves this stock. And he says, this is major, major support. You've got to buy this thing because it just looks great. Well, according to strategy 3, we were actually in an overall downtrend, and it generated a sell signal here and here. And as you can see, what happened in the following days was a really nice, strong move to the downside. Now, as you can see, the stock gapped down just about a couple of months ago strongly. Now, did we know that there was probably some news or some event that caused the stock to gap down that sharply? Absolutely not. We take all the information from just using some very simple techniques that have stood the test of time, maybe one or two indicators at most, and then listen to the market. You see, we've never been trained to listen to the market. We're always trained to listen to someone or something tell us what to do. But my mentors taught me that everything comes from the chart in front of you. That's the source of your trade, so why not just listen to that? And that's what we teach at Specialist Trading and Pro Trader Strategies. So you're going to get the complete rules to strategy 1, 2, and 3. And lastly, you're going to get mentoring correspondence with myself. Through email, you'll be able to contact me whenever you like with questions, anything that we presented in the ebook that didn't make sense or you're a little confused about, and I can explain it to you and go over it with you as well. So lots of great information in this Insights, Wisdom, and Trading Strategies from the Floor package. This is our Insights ebook. Now this usually runs $99, but because of our association with the Online Traders Summit, we are discounting that for today and the next couple of days, I believe, down to $38. That's a great, great offer. In fact, I think if you looked at your trading yesterday, you probably spent more than $38 in commission costs alone. I know many of you probably did. So I can't think of a better way to educate you, to get tons and tons of information completely different from what I shared with you today. You've already got the 5 exit strategies today. I'm giving you more strategies and tons more in this ebook for only $38. So here's how to take advantage of that. You can go to my sister site, which is Pro Trader Strategies. Email them at trading@protraderstrategies.com. Call them directly at area code 310-598-6677. And the link you see at the bottom will take you directly to that $38 sign-up page, okay? So the only caveat is that's not a live link. You would have to copy and paste that onto your browser. So the best thing would be, if you're having trouble copying and pasting it onto your browser, just to contact Pro Trader Strategies. There's no obligation. They can help and set you up, but you must act quickly if you really want to get that $38 deal. Okay, that's a fantastic discount. $99 alone is a great discount, but $38, you can't even go out to dinner for less than $50 these days. So $38 is a great, great deal. So I hope you all take advantage of that. And I want to thank you so much for sticking around and for waiting to ask questions. I guess I will open up the question and answer box right now. I don't want to miss anybody, but let's see here. Michael is asking, Stephen, would you show the exit strategy number 5 using the DONCHIAN channel? Well, I don't want to backtrack that much, Michael, but just let me share with you what it is that the DONCHIAN channels are on some formats there are 2 channels, on others there's 3, but what they are is a stair step. Just go to Metastock, plot it, and you'll see a stair-step approach, okay? And what happens is they'll be in sync when you're going in the same direction. So if a stock is going straight up, you'll see them all going, in sync with each other. If the stock or a future or the currency pair is going down, you'll see them all going lower. But remember, once you see one of them change direction, well, then we're going to see like a trend change most often happen. So that's your signal of you either want to exit entirely, or perhaps you want to move your stop using one of those stop placements I shared with you, or perhaps you want to exit a portion of your position and move your stop. But just experiment with it. The main thing I just don't want to backtrack that much because I have to go back about 20 or 30 slides, okay? But just the main thing is that, Michael, you want to see them in sync. If you're in a trade and they're all in sync, that's good, okay? The minute they're out of sync, they're going in a different direction than previous, then you want to exit, okay? William asks, great presentation. How many hours is the ebook? Hours? Well, it's yours. You can take as many hours as you want. I'm not really sure what you mean, William, by how many hours. If you're asking how long would it take to read, well, it's up to you in terms of how well you can grasp the information, okay? TJ asks, you say give a trade 2 to 5 bars on the time frame you placed it on. Does this apply only to the 9-period exponential? Yeah, well, once again, we don't teach nor do we trade systems, so I'm not going to say, yes, it only applies to them. If you want to experiment and it works best for you on another of those techniques, fine. But our suggestion is that you should definitely try that with the 9-period exponential. If you want to alter things a little bit on your own, that's fine. Remember, it's not our philosophy to tell you how to trade. It's our philosophy to point you in the right direction so that you can make the decision, okay? Let's see here. Stochastic has two numbers, like the 14 is followed by 3. What is the 5 followed by? All you're concerned with is just the 14. So if the slow stochastic is 14, all you want to do is make sure that it just is the 14 is changed to a 5. That's it. We're just concerned with the 14 setting, okay? Ali is saying, please show on one live chart the Donchians. Well, first of all, this is a static PowerPoint presentation, so we don't have the access to live charts. But you can easily, put them up. If people don't mind, I'm going to have to really backtrack here. I'm sorry if you're having trouble with the Donchian channels. Excuse me for doing this. But let me just go back. There you go. There are the Donchian channels, okay? Now, as you can see, they're all headed in the same stair-step direction. They're all going up, sideways, up, sideways. Even when they're going sideways, where were they previously? They were lower, so that's still upwards. It's not until this point that this one continues to go up, but this one goes lower. So that's telling you that they're out of sync. This is telling you that, things are changing. You may want to exit, and you would have exited as early as right here, okay? So you all understand how this works. Okay, good. Let me go back to the other pages. I'll have to go back up here again. Excuse me. Well, I just want you to be able to, I know some of you want to copy down that link, so I want to make sure that you can see that. Okay, good. Some of our people are saying they already have some of our strategies, and is the information on strategy 1, 2, and 3 as complete as my strategy 4? Brad, the information on strategy 1, 2, and 3 is completely different. In fact, strategy 1 is based off of an entirely different indicator than strategy 4. In fact, strategy 4 doesn't even use indicators. Strategies 1, 2, and 3 don't rely on the PET-D, so they're entirely different. So if you're asking if they're the same thing, no, they're entirely different strategies, okay? Now, can you apply these strategies to any market? Yes. So I don't want you to think that, well, do they work on stocks and only, currency pairs? They work on anything and everything. It's up to you just to apply them. Let's see. People are asking about purchase of different courses. Contact Pro Trader Strategies, because remember, I am the educational portion of the company. I'm just strictly about educating you. If you have a question about wanting to purchase another course or something that you've seen before, if you've attended my presentations and you'd like to get something else a little bit more advanced, that's fine. Pro Trader Strategies can help you. But the best thing is to contact them, and they can set you up with any discounts, any type of new platform or anything that you're interested in. Just the main thing is just to really contact them for education. I should say contact them for pricing and contact me for education. Okay. Let's see. Are Donchian channels the same as Keltner channels? No, it's a good question. We get that question a lot. They're not the exact same. They're similar, but they're not. Now, if you want to experiment with this on Keltner, feel free to. But remember, what you're looking for is for these channels to be in sync, and the minute they go out of sync, that's your red flag that the trend may be changing, okay? When do we get the ebook once we order? You should get it as soon as possible. You should get it just instant access, okay? It's not something you have to wait to be shipped to you. It's an ebook, so it should come right to a link to you, and it's yours to keep. Now, remember, this is not something that expires. It's yours for life. And also, in addition to that, you are a student of mine for life. So you can contact me through email whenever you'd like. This is not something that expires in 2 weeks, okay? Now, the price may expire and go back to $99. So I would take advantage of $38. I really don't think, you're going to get this much information, educational information, from someone who has applied these for 40 years to his own personal trading. And it's taken me that long. I really want to shorten your learning curve, okay? Let's see here. A lot of people are saying, yeah, they don't get the Donchian channels. Remember that you have them available on Metastock. I would do a Google search. I know that there are some some websites, but you can go to Metastock and they will furnish you one on their platform. Contact the people at Pro Trader Strategies. They can set you up. They can help you find some Donchian channels, okay? Let's see. Dennis is asking, says, I bought it, but I ended up in the video section of your site. That may be just the conclusion of your purchase. Once again, there's no obligation. Contact Pro Trader Strategies, and they can set you up. You may have hit a, you may have hit a another link, and that's why you went to another page. Okay. Let me just get a few more questions here before we have to get set for the next person. I don't want to take anyone's time because I know you have a lot of great stuff here. Let's see here. A lot of people are asking about the edits. Okay, I'll go over those rules for edits one more time because I see a lot of people are mainly asking about that. You may want to write this down. If you're editing the slow stochastic, the standard default is 14. That's all. That's the only number we're concerned with. You just want to change 14 to read 5. That's it. Don't worry about the other numbers. Okay? On the Donchian channel, the standard default is 21. Now, some platforms may have it set to 20. But it's either 20 or 21. That's the standard default. We want to change that number to read 9. All right. If there are any other numbers, don't worry about them. Just those are the numbers you're looking for. Okay. Just the 14 and the 21. Okay. Let's see here. People are still asking. Yeah, I guess that's the main question I see as I go over most of these. They're all asking about, well, what about the D and the K, and do I change those, and what do I do? Yeah, just change the standard one, okay, and you should be okay. All right, I guess that's about it. I want to thank you so much for attending. I want to thank Jeff for inviting me to speak once again, and all of you for attending the Online Traders Summit. I really hope that you got something out of this today. As I stated, we are an educational company. It's not. It doesn't serve my purpose or your purpose if I tell you what the perfect time frame is, if I tell you what to buy, what to sell, what the perfect market is, because basically all I'll be doing is just taking your power away and taking you out of the game. I mean, that would be no different from someone flying an airplane and then you know, saying, well, what do I do now? Tell me how to fly this thing. You're supposed to know how to do that before you take off, and that's the same way with trading. But unfortunately, we're all taught to take our cue from someone or something else. It's our goal at Specialist Trading and Pro Trader Strategies to provide all of our members around the world with sound fundamental education that has stood the test of time, work with you to show you what works best with your nature, your persona, makes you feel the most comfortable, and then mentor you along the way so that you can ultimately become consistent. I hope I did that a little bit today with these 5 exit strategies. Remember to work with them, you know, paper trade. Please experiment first, do the research before actually applying real capital to the markets, just to see which ones work best for your style. And then once you do, stick with 1 or 2. I really strongly, truly believe they'll change your trading in the best way possible. Okay? Thanks again to everyone. Thanks again. Just contact Pro Trader Strategies at the email below or call them directly. And I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.
Excuse me. Thanks, Steve. Great job, too, by the way. Really appreciate him doing it. A lot of comments on a great presentation. He did a good job. So let's go ahead and kind of get switched over here, because I need to thank our sponsor, Stocks and Commodities Magazine. Again, valued sponsor. Very, very good magazine. Do a lot of good work over there. Every month they deliver the good articles, and I'd recommend that you take advantage of it, the free trial. If you buy any of the products that we're selling here at Metastock, we're going to actually give you 2 free years of Stocks and Commodities as part of your subscription, or as part of your purchase. And you guys know the value of education. I don't need to really preach on that. You've been here all day. So in any case, and I appreciate your comment. I hope you're enjoying the session. I hope it's valuable for you. I so love these things. It's like we get to have a party all day Saturday. So, in any case, Sabine, thank you for the message. We're actually going to be talking a little bit more about Metastock as we get going, or as we go along today. We are running right upon our start time for Chuck Hughes, so let's get into him. If you do want to do a trial subscription to Metastock, what we are offering is a extended trial. You can buy 1 month and get 2 free months. It's been rated #1 in Stocks and Commodities for 25 years in a row. Incredible. We're very, very proud of that, and the reason I think that is, as I said earlier, is I think it's software that's very, very valuable in helping you identify good trades now, test trading ideas, forecast price activity, get real-time alerts in what you're doing. Give it a try. Metastock.com/tradersummit 3-for-1. And you can also give us a call. No, the phone lines were very, very busy earlier. We do have a couple of reps here. You can call and talk to them right now if you want. 800-882-3040. You also might want to chat online with them. It's metastock.com/sales-chat to talk to them. So, in any case, Sabine says, I've been seeing it from Task Magazine, but not sure what it can do for me. I'll check your trial offer. And if you stick around for a couple more sessions, I'm actually going to show you kind of my favorite things in Metastock, Sabine. So we'll have more information about Metastock for you. And there you go. DC stands for daily charts, TN, and RT stands for full real time. Okay, the daily charts are just daily, weekly, monthly, quarterly, yearly, anything above a daily format, and they update once an hour during the day, whereas real-time gets full real-time information. It includes a real-time product called Icon, or we call it Zenith here. It's actually Icon. Icon is a fantastic product for news. Reuters spent something like $1 billion, well over $1 billion now, developing it out, and it's a fantastic product. It's if you're interested in kind of getting that same level of access as your broker to news and information as your brokers and banks have, well, it is exactly what your brokers and banks get. It's exactly what, the only real difference is they pay quite a bit more for that real-time package than we do. Okay? If you already have Icon, you can actually subscribe to Metastock, but you'll want to contact Thomson Reuters direct for that. If you want to get Metastock for Icon, we have a number of institutional brokerage and Icon clients, and you'll just contact Thomson Reuters to get